let me tell you that Peace Jam is having a meeting this Friday, 4 o'clock, Dr. David Ann's office, room 325 on this floor. If you have any interest in Peace Jam or know about it. If you don't know about it and want to know more, I can help you with that. So with that said, let me turn it over to Kelly.
Awesome.
Thank you, Kelly.
Thank you very much, sir. Good morning, everyone. A few people here. I kind of start this out. Let me. I say I'm going to start this out. I should probably get things up here. Is that it? There we go. All right. Always start something slow. Okay. Don't make changes. Gotta love Windows. Always got 50 changes to make when you get there. As Dr. Watley said, I am a student here. I'm in the MBA GLSD program. And to tell you a little bit about myself, as I told him, I think I'm on my third decade now trying to change the world. I tried for a long time to do that in the Navy and change some things. Well, let me rephrase that. The world's markedly different than it was 30 years ago, so I'm going to take some credit for part of that. I don't think I can take a whole lot, but maybe I did. I kind of found at one point that what was really important to me was helping people and making an impact that way. Since I've gotten out of the Navy, I retired about 6 years ago. I've started looking at things and what are different ways we could do this and make better changes, make more lasting changes, make more equitable changes. And what really came to me was using the social markets, capital markets, to make those social changes. So that's what I'm going to be talking about today. How we can use social enterprise as an alternative to industrial capitalism. And I'll start this and I'll kind of say from the very beginning that I am a capitalist, and around here that kind of gets some bad name every now and then. I won't say it's undeservedly, because there's a lot of things that go on with capitalism that are not good. We're going to talk about how some of that stuff happens, or how I think some of that stuff happens. We're also going to talk about what capitalism started as, how to move forward with it, how we can maybe change it and use the power of capitalism to change the way the world works. All right, so let's start and we'll talk about capitalism. Anybody know how old capitalism is? Several hundred years old. We dated back to the 15th, 16th century. Some people take it back earlier than that. When you talk about capitalism, the main idea of capitalism is taking assets and pooling them together to do something. Whether that's to get a ship and trading goods together to sail to the other side of the world and open a trading post, or whether it's to build a factory or whatever. The whole idea is just to pool those assets to do something. Whether the something is good or bad, right or wrong, neither here nor there. Just the pure idea is to do something. So, let's move forward with that and let's talk about this. One of the cool things that capitalism did, prior to the advent of capitalism, we had a lot of the elements of productivity were owned by the state, or they were owned by the church, and there wasn't really a whole lot of room for great ideas. If you had a good idea, you had to find a sponsor for that idea. You didn't really have the ability to maybe reap the benefits of that. So if you're Christopher Columbus and you have a great idea, you're going to sail to the other side, or you're going to sail to the Indies going west, you got to go around and talk to people and say, hey, I want to do this. You go to the Queen or Queen Isabella and you say, will you give me the money to do this? And she says, yes, I will. I'll support you with this. Maybe you get to be Admiral of the Ocean Seas, or maybe she just cuts you off. You don't actually own part of that enterprise. Well, capitalism gave you the idea of one person to input the idea while others inputted the capital. I'll perspective. You've got a great idea. Nate walks up to me and says, I've got this fantastic idea. I think I can do this. I can make widgets and they will help save the world. Nate doesn't have any money to do those kind of things.
Grad student.
Pardon?
Grad student.
Grad student. It kind of goes that way. Kelly doesn't have money to do that either. And he comes and sees me. So we need some money to get this idea moving. Money goes into it. Now it's a bright idea, and it starts working. Well, that money comes from a few different places. In the financial services industry, we say the first place that comes from is friends, families, and fools. So it's your friends, it's Nate coming up to me going, Kelly, I got this great idea, can you help me? And I go, Nate's a friend of mine, yeah, I'll help him out. Here's some money to help you with your project, to start out with it. Mom, I got this great idea, can I do this? Or the fool section is one of those is, I was at the airport in the bar, and this guy sitting next to me told me about this fantastic idea he's got for a startup. I'm going to invest in it. Now, maybe not a good way to do that, but that takes the fool's portion of it. So Nate gets some money, Mom helps him, I help him, the guy at the bar at the airport helps him, and he takes that and he proves his concept with his widget. Now he's ready to start making it. But he's going to need equipment to do that. He's going to need some place to do it. The garage doesn't work anymore. So he's going to go out and he's going to talk to some other people to do that. Put together a business plan and go talk to people called venture capitalists. What venture capital does is that infuses over a period of time. So they might give him $50,000 this year, or right now, and $50,000 6 months later, based on him meeting these goals and getting there. So they're going to help build him to that. So Nate gets to the point where he's gone from proof of concept to now he's actually doing this, and he's producing this product and is selling in Hawaii. And that's awesome. He's doing good, but we want to move up and start doing this idea on a larger scale, maybe start selling on the west coast of the United States. At this point, he might go to somebody called a private equity firm. Private equity is going to help him to go that next step. So each time we've gotten more money, it's been about going to that next step. Once we're at this point, maybe we're at a regional level where he's producing things and selling them in the Southwest and the Pacific region. But we want to go a little bit more, take that idea a little further. Up to this point, things have kind of been okay. Nate's running things, pretty much. The venture capital guys are going, you know, from a venture or from a business point of view, or the private equity guys are saying from a business point of view, you might want to put this process in. You might want to try this. You might want to try that. But they're very much, for the most part, they're about getting this idea moving forward. And it's still very much about the idea at that point. Now to go a little further, a lot of companies move one step further, or one step more, with an initial public offering, or an IPO. An IPO is where you move from privately held onto a public stock market, whether that's the New York Stock Exchange, NASDAQ, the London Exchange, the Singapore, the Tokyo, and there's exchanges all over, and being traded at that level. And here's the problem with that. On any given stock exchange, there's a lot of different kinds of companies. Some of them are still focused on that idea, and they're focused on what it is that they want to do, and creating the product or service that they create. But there's a lot of companies that have moved away from that, and they're not really thinking about that so much. They're focused more on making money. But they're still trying to do things very, very well. They want to have an admirable company. They want to do, I mean, you might look at Google in this case. Google with their do no evil purpose, you know, that's their guiding principle, to do no evil. They've kind of moved beyond the search engine to phones and stores and all this kind of things. They've expanded out. And I don't know that this is the case, but it kind of seems like they've moved from their purpose onto making money. But they're still trying to do that ethically. But then there's also people out there that have really kind of blown past the ethics side of that. And it's just, you know what? We're just going to make money. The problem is, and why in my mind this comes in at this point, is because once you start going public, now you've got an entirely new group of people that you never had to talk to before. When Nate goes public, before he goes public, he had to talk to me. And he had to talk to the venture capital or private equity guys, but he probably knew all of us by name. Now there's this group of people called shareholders. And in the secondary market, or in U.S. culture, or Western culture, there's been studies that have done that say about 82% of the executive level, or excuse me, the C level, chief executive, chief information, chief technical, chief financial, at the chief level of executive, about 82% of them say that their number one focus is on shareholders. So a lot of these shareholders are just thinking about making money. I invested in your company because I expect you to make money. The expectations are there. So they're saying something, and they're electing people to the board of directors. And the board of directors are breathing on your ear going, you need to do this to make money. Well, I don't want to do that because that really kind of goes counter to what I think is right. Well, no, it doesn't, and in this way. You could make a little bit more if you trimmed a little closer to this regulation. So there's some companies out there that do that. You get beat up a little bit, and some of these companies can go into this mass and just kind of disappear. Marjorie Kelly talked about this when she talked about phantom assets in owning our future. There's the corporations, there's the companies, what they're worth, what their assets are, what kind of goodwill they have. And then there's the secondary market, which is what do you think they're worth. But there's someplace even scarier above that. And that's called the derivatives. Oh, excuse me, this is the financial economy that Marjorie Kelly was talking about. That's the derivatives market. There's some legitimate stuff going on in the derivatives market, but most of the derivatives market is just about making money. Anybody been to Vegas? Nobody in this? Oh, okay, I got a few.
We're in Hawaii, that's all
I've been to Vegas. The thing I think is so cool about Vegas, you can play nickel, dime, quarter, dollar, $5, $20 slots, roulette, craps, keno, every kind of poker. There's so many games that are out there. And they're always coming up with new games that you can play. The derivatives market is a lot like Vegas. Because at this point, it's very much separated from the company. And now it's based on what's happening with the stock. Do you think something's going to go up? Do you think something's going to go down? Let me bet on that. Let me bet against it. This way, that way. And unlike Vegas, if you walk into this casino and you don't see a game you like, just talk to somebody. They'll figure out a way to make the game for you. And another thing that's a little different than Vegas, Vegas is worth a lot of money. I had an interesting conversation with my son when he was, I think he was 10. We were moving out here to Hawaii, and we stopped through Vegas just to kind of see that and have some fun. We were staying at the MGM Grand. And he's watching on TV the game channel that tells you how to play everything. And he says, Dad, you need to do this so you can win some money. And I thought that to be a wonderful teaching point. So I grabbed him and I said, okay, let's go here. And we went down to the foyer, the reception desk with all the gold and the marble and all that. And I'm like, look around here. What do you see? He says, yeah, it's amazing. It's really cool. They got all this stuff. I said, now come over here. And I showed him the casino. He couldn't go in the door. I just showed him into that area. I said, that is where they make all the money to build that. And they don't build all that because you're winning money in there. It's because they're winning money. And he's like, oh, okay, I get that. the size of this, as much money as they make in Vegas, dwarfs in comparison to this. As much money as we make in the global economy, dwarfs in comparison to this. $1,200 trillion is the estimated value of the derivatives market. Paul Wilmot made that just recently. He's a pretty popular financial blogger. And again, the only thing they're looking to do in there is make money. So how does this problem, how does this affect our business, our great idea? Well, okay, here, let me give an example. How many of you know what a derivative is? Okay, all right. Recognize this logo? Everybody recognizes this logo. We're going to talk a little bit about something called a call. And this is one of the derivatives that goes on there. So in the past year, over sometime in the last year period, Apple stock has been as high as $700 a share. Right now it's about $450. Anybody here think it might go to $500? Go back up to $500? Think it might go above 5? Anybody? Debbie thinks it might go above 5. Well, here's the thing that we can do in the derivatives market. So I've got my share of Apple stock. And Dr. Watley thinks it's going to go above 500. So I'm going to offer to sell him this share of stock for $500. He has to pay me $10 for that. Now the only time he's going to buy that share of stock is if it goes above $510. Then he can sell it, or he can buy it at $500 plus the $10 he's already paid. Then he can turn around and sell it and make a profit off of it. Well, I don't think it's going to go up, so I just made $10 off of him. Worst case scenario, I have to sell him my stock, and I make $60 off of it. That's not too bad. That's not too dirty until we take this share of stock away. I don't even own this share of stock anymore. He owns the share of stock, but I sold him, it's called what's called a naked call. I sold him the right to buy Apple from me at $5 or $500. He gave me $10 for that. If it doesn't go above $510, he's never going to exercise it. I just made $10. That's pretty easy money, right? The problem comes in that if Apple stock goes to $1,000, I still got to sell it to him for $500, which means I got to give him $1,000 to buy it back and then sell it to him. And that's theoretically, I mean, if Apple stock went to 2,000, it goes crazy. So the problem with this is you get huge bets, and they start to sway, and they start to make impacts on things. And as they go across, as this moves, it has an effect on the secondary market. And that effect is people start shorting stocks, selling things that they don't own, expecting the price to go down or expecting the price to go up. If the derivatives market starts making indications that they expect a stock to go down, these people start looking at that. This entire market, and I hate to use this analogy because it's the business I work in, all of this, so much of what goes on in the market is like high school. It's like everybody looking around going, what do you think? What do you think? What are they doing? What are they doing? And when you see somebody, a clump of people doing something, it's like, oh, what are they doing over there? They don't like Apple? Why don't they like Apple? What do they know that I don't know? Maybe I should take a defensive position too. And in the case, I'll use the case of Nate's company. The derivatives market doesn't like that, or doesn't like Nate's company. Why? Well, I better go short on that position myself. I better protect myself. Maybe I should go ahead and sell it. When you start selling, the price starts going down. Well, now his company's less valuable than it used to be in the eyes of the secondary market. What changed? Nothing changed in his business. Everything's the same. They're selling the same amount, but now it's considered, it's on the watch list. it's a question of a company we may have problems with. So the derivatives market affects the secondary market, which can affect our company. Now the stockholders are going, I lost value. What happened? Nate, do something about it. You run this company, fix it. So Nate starts looking for ways to do things. Well, how do I cut expenses a little bit? How do I generate more sales? Well, if we cut the price, if we negotiate with our workers, or we refuse to negotiate with our workers, and we refuse to give them a higher raise or cost of living allowance, we can cut our prices some. Well, if we ship production of our product to China, we can basically do away with almost all the environmental controls that we use right now. That'll save us some money. That'll make us more valuable in the eyes of the secondary market. So it starts to cause problems with that. So what can we do to protect that? We're going to protect Nate a little bit. We're going to give him some purpose. In Built to Last, I think it's Collins and Porras, P-O-R-R-A-S, I'm not quite sure how to pronounce his last name. They listed purpose as one of the key characteristics of a visionary company. Those companies that stay and last. And this purpose has to be more than just make a lot of money. It's something that endures. It's something that the company can get behind, the employees can get behind, and it gives them that long view. So what happens to the share price on a quarterly basis isn't quite as impactful for everyone. So purpose will help protect us. Now, here's one of the problems with purpose. It gets written into the strategic plan. It's part of the vision. It's part of the mission statement. You get a new CEO. Nate decides that he's been with the company long enough. He wants to retire. He wants to go to the Bahamas, go scuba diving. New CEO comes in and says, I think we should take this a different direction. And the purpose gets written out. So what we need is we need the ability to protect that company. So, well, when the bad money comes in, it just bounces right off. Luckily, we have that ability. And now it's called a benefit corporation. Benefit corporation is very new. It's within the past 5 years. I don't remember the exact number of years. It does a few really cool things. It writes that purpose into the DNA of the corporation. DNA of a corporation is its charter. This is what we're here to do. It has to have a benefit corporation in its charter. It has to have a purpose. And that purpose has to have a materially positive impact on social and environmental issues. And they write in what that is. It also, with a benefit corporation, one of the big concerns and one of the big misconceptions with regular corporations, most people you talk to have this misconception that the corporate leadership has to do what's in the best interest of the stakeholder, or excuse me, the shareholder, not stakeholder. You talk, that's why 82% of the executives think that that's the people they should be focused on. There's no legal requirement that they do that. There's no case law that supports that. But that's kind of the easy way out. The actual fiduciary requirement that they have to the corporation is to do what's right for the corporation. And that can be long-term. But this covers that with the benefit corporation. It says it doesn't just have to be about the stakeholders. You can, by all means, you need to account for shareholder stakeholders in decision-making, not just shareholders. And then last, you have to produce an annual impact study that says what you did socially, environmentally against a third-party standard.
So the difference between a shareholder and a stakeholder is?
Shareholder is, I own part of Nate's company. Stakeholder is Nate's factory is right next door to your house. And you know, for all intents and purposes, if I'm just totally focused on money as a shareholder, I'm going to try and convince Nate to cut as close as he can to regulations. If 1,000 parts per million is the limit, I want him at $9.99 and not $1 more. You live next door to him, you don't have anything to do with the company, or maybe you're an employee there, but 999 parts per million is bad for you. So you have to be considered into his decision making. Does that make sense?
Yeah.
Okay. Now, one of the ways that we do this with this third-party reporting, one of the biggest out there is a Global Reporting Initiative. Global Reporting Initiative, has anybody heard of Triple Bottom Line? This is one of the things that they work with. It's a framework that you can go through, look at your company, grade it. Depending on what industry you're in, GRI will help you figure out what things you need to be looking at, what metrics you need to be measuring. Basically, they're going to cover environmental, governance. Governance comes down almost entirely to transparency, social aspects, and then the economic performance of the company. So you can compile all of these factors, and that's where you can get that triple bottom line of people, environment, and profits. So we're doing good for all of those. Now, the Benefit Corporation, it's been approved in 12 states. Hawaii is one of those states. There's 14 pending. The nice thing about this is it takes a two-thirds supermajority to change the purpose. So if all of us get together and we form a corporation, a benefit corporation, and we say our purpose is to keep Fort Street Mall clean, we go public, the class next door, they come over and they say, yeah, we want to buy into your company, but we really don't care about 4th Street Mall, and they're the same number as us, it's a 50-50 split. They can't vote at a meeting and say, well, we got 51%, so we're changing the purpose. It takes a supermajority to do that. Part of the idea behind this is companies that are going to go in, or things like hedge funds, I'm blanking on the name. If you go back to, what was it, Wall Street, Gordon Gekko, that went in and would just gut companies and sell them off for parts and all that, this is going to help keep those kind of people out because they have to maintain the purpose of the corporation. One level higher than that is a certified B Corporation. This is an actual certification process that you go through. It's a nonprofit called B Lab that runs this. There's maybe 100 companies that have done this so far. Some of the key things that go into it, the performance is audited. You send it to B Lab, they can audit that, check to make sure that things are being done the way they're supposed to. That annual report, they will verify those numbers are correct. GRI can help with that, ISO 26000. There's a few other organizations that will help you audit that performance. Being a part of this group, and this is something we'll see in a second, this is not a real easy process to go through. I believe it's a very worthwhile process to go through, but it's not real easy. So the companies that have gone through this are ones that are looking more than just at themselves. They're looking at the world and trying to make a change there. So there's a very solid support network. Their website gets a lot of traffic with one company saying, hey, I'm trying to do this. Does anybody have any ideas? Yeah, we went through that same thing, and this is what we tried. It didn't work for us, so we ended up doing this. And there's a lot of support goes on in the background. Plus, there's also, through B Labs themselves, the people that make up the network, or that nonprofit network, a lot of academics, a lot of nonprofits that are in there, other nonprofits, and they're willing to help in those areas and do research and try and figure things out for you. Unlike a benefit corporation, a B certified or certified B Corp is available worldwide, so anybody can have that. some examples of those. So what they're trying to create is not just companies that are not just the best in the world, but the best for the world. I saw this and I thought, wow, this is a really cool place. Kind of had a chance to get away, nice and rustic. This is actually in Yosemite, so beautiful environmental place. It's the Evergreen Lodge at Yosemite. They've been around for a while. They have a goal, as stated, I believe it's in their B-Lab profile. What they want is when a guest comes there and stays with them for whatever period of time, they want that guest to return. They want it to be someplace that they come back to over and over again because they enjoy it that much. Or if you're not able to ever come back, they want you to remember this as the greatest vacation that you ever had. And all the people move towards that purpose. The idea is that they'll make some money while they do that, make some profit for their owners. But not only that, it's to support at-risk San Francisco Bay youth in developing stable, rewarding careers and lives. So what Evergreen Lodge does is they bring young people from the San Francisco Bay Area, at-risk teens and their 20s. They bring them to the Evergreen Lodge. They're in paid intern positions. They give them some place to live, pay for food. They teach them a trade. They teach them customer service, give them an outdoor experience, help teach them life skills. So they're doing all kinds of great things to hopefully help these kids. On the other side of it, they get a whole bunch of their power from renewable sources, a very strong female contingent there. Most of the percentage of the employees come from low-income communities. Everybody is paid a living wage. And 70% of individual health insurance premiums are covered. So they're doing good stuff and they're making money.
How long have they been in existence, do you know?
1921 for the lodge themselves. They've been following, I want to say it's since about 95 or 2000 that they've added the social component to it.
Are they certified B Corp?
They are certified B Corp. They certified in 2011. So, Evergreen Lodge, very sexy, very cool, very easy to equate that to the environment and all that stuff. So here's one that's maybe not quite so sexy, toilet paper. Kind of an unsung field there, but a lot of opportunity for environmental impact. This is 7th generation. They're looking to create healthy solutions for the air, surfaces, fabric, pets, and people within your home, and for the community environment outside of it. How do they do that? All their products are non-toxic, some of the energy from renewable sources. One of the things that Marjorie Kelly talks about, and I think Ray Anderson talks about it also with when he talks about Market 2.0, high amount of employee ownership. In this case, over 75% of the employees have some form of ownership of the company. Paid time off. They also have incentives for low-impact commuting of employees. A lot of really cool stuff there. And going back to that idea that you get what you measure, they measure a portion of their managers based on those social and environmental goals that they have. So, in that case, both 7th generation and Evergreen Lodge, we've got a profit purpose and we've got a social purpose. 7th generation is a little closer than it is with the other two. Let's talk about putting those entirely together. This is a market, this is a vehicle, when you start talking pure social enterprise, The idea behind this is finding something that has a social impact and you can make money from. Doing good stuff and getting paid to do it. This kind of company is, we're just starting to see, I mean, there've been a few that have been around for a while, but it's really starting to explode. A lot more popularity to it. Some of the companies that are up here, let's see, we've got Zuna. Zuna is based in Zambia. It used to be called MTI, which was Mobile Transactions. I don't remember what the I stood for. Apparently it's a problem in Zambia. You can't really carry cash. Or if you do carry cash, the bank's a long ways away. So if you want to buy something, maybe your bank is, you got to go into the city to the bank, that takes a day to get to, and what you want to buy is a half-day bus ride the other direction. So it takes you 3 days to actually conduct this transaction, because you got to go get the cash, and then you got to go get the thing you want to buy. What Zuna did is they've started working with cell phone carriers and using cell phones to make transactions. So, I mean, there's no credit card to swipe with that, but you've got the cell phone, which you're going to use anyway, and you can use that to pay for things. We're just starting to see that in the U.S. Africa is actually ahead of us on the idea of paying things, that mobile wallet idea. I'm going to butcher the name, Vaatsalya. This is a chain of hospitals in India. Their goal is to provide affordable health care in rural and semi-rural areas. When I believe it's Bamboo Finance that started working with them on this. And it was a $400 million investment that Bamboo Finance did. They basically pooled that among it from a group of investors, gave them $400 million. In that time, they've moved from 4 hospitals to 15 hospitals, and they're continuing to expand that. They do a lot of really low cost. India's doing a lot of really cool stuff with healthcare as far as driving down costs. And Vaatsalya is one of them that's playing into that. They're reaching a group of people that were lacking healthcare. So, pretty cool thing there. Vision Banco is from Paraguay. They are the first Paraguayan financial services company to move from just financial services into being a true commercial bank. They loan money to predominantly, I think it's like 80–85% of their clients are small and mid-sized enterprises in Paraguay. Definitely an underserved market. They're helping to build the economy there and provide jobs. VEDC, this is the Valley Economic Development Corporation. It's in California. And their mission is to provide mentoring, training, and finances for women entrepreneurs in California. They're providing a lot of jobs, getting people involved. And then the last one, Community Energy, that I've got up here. Community Energy does utility scale solar and wind projects, mainly focused in the Mid-Atlantic region. They're helping to bring renewables onto the grid. So pretty cool stuff there. These are 5 examples. There's literally thousands of these little companies out here that are doing things, that are moving forward with this. Now, when we started talking about regular companies, we were saying, okay, you know, you've got your purpose and you're going to do this, but we want to look at your triple bottom line. We want something like GRI, where you're going to show us what your impacts are with things. With these kind of companies, it's a little bit different, because we're not just looking at how do you do business. I don't want to know that you're just good. I want to know that you're actually having some impact on what you're trying to do. So the big push right now is figuring out how to measure those kind of things. So I'll take VEDC because that's kind of a simple one. if you're going to empower women in California, what kind of things do you measure? Do you look at the number of women that you've moved from poverty into their own business? Do you look at the number of jobs created? Do you look at the percentage of women on social support? So there's a lot of different things, a lot of different ways that you can measure that impact. And we're really kind of coming to terms with that. There's a group called the Global Impact Investors Network, GIIN. And what they've created is called IRIS, the Impact Reporting and Investment Standards. Just like GRI is a framework to show how a company is doing well or doing business properly, this is a framework by which people can go in and you can evaluate a company as to, or a social enterprise as to what they're actually doing. Okay. So, the question is, what can you do about it? Let me rephrase that. What can we do about it? First step, make a difference with your work. I assume most of you, I know a few of you already have full-time jobs here at the university and won't be graduating and moving on to other stuff. If you're going to graduate, when you graduate, you go to look for a company to work for. Look at what they're doing. What kind of sustainable impact are they making? Are they trying to do business the right way? You can you can look at their GRI reports and see how they're doing business. Are they working to improve? Be a force inside that company. I'll say this, I'll use myself as an example. I was thinking about this morning, going over this. Probably, I would doubt that in the past 3 years that there has been a day that I have not thought of some way that I could use capital markets to make the world a better place. It's just my focus. I talk to clients about it all the time. So you guys aren't the only ones being bored about this. My clients get it all the time too. It's even worse, my wife gets it 18/7. So I sleep some occasionally. So make a difference with your work. The next is give back. I come at this from the Christian perspective. Judeo-Christianity says that we should tithe, whether that's in the church or wherever, you can go however you want to do that. Islam talks about alms. Most of the world's major religions talk about giving back and providing through charity or philanthropy. The thing I encourage everyone to do, and especially if you're just starting out, it's easier to do. If you've been at this a little while and you got to make some changes to your budget and stuff, it's a little bit more difficult. But take that 10%, give it to the church, the mosque, the synagogue, the temple, Compassion International, Red Cross, whatever, Greenpeace, Sea Shepherds, I don't care. Take 10% and put it into the world. Put it out where it can do some good, help support those people who are struggling in nonprofits to do something. And last, invest wisely. And that's the one that I like because I know about that one. What can you do to invest wisely? Avoid the behemoth. That derivatives market out there, don't go to Vegas. Just don't go. And when somebody says, yeah, you know, we've got this really great plan where we use options to do this and do that, just go, yeah, I don't think so. Help turn the elephant. The secondary market, it's starting to change. I will say that. I know 20 years ago, early 80s, there were about 5 to 10 mutual funds that focused on socially responsible investing and environmental type things or sustainable investing. Now that number's up over 250. So we're moving that way. And it also used to be that in the 80s, 90s, if you wanted to invest on environmental standards, you really screened out a whole lot of the corporate world that you couldn't invest in. Now that's changed a little bit. There's, I can get a percentage, but there's a very, very strong, a very large majority of companies are looking at this because their shareholders, their stakeholders, their employees are asking these questions. What are you doing for the environment? So find out about those companies. If you're going to invest in somebody, check out their GRI reports or their impact reports, whatever type they're using. Another way to do that is just look socially responsible mutual fund investing. Find the one that matters, find a group of them that match your values. The information's out there. You can look it up. If not, ask your financial advisor about it and say, this is how I want to do things. And the last one, and the most risky one, help out the little guy. Be one of those friends, families, and fools. This is by far the riskiest one. Don't invest everything you own into this. If you got $50,000 in the bank and Nate comes to you about his widget company, don't give him all $50,000 of it.
49 is fine, guys.
49 is fine, yeah. There's a small percentage that can go into this. There are also, we're really seeing a big jump in the industry with the availability of venture capital and private equity on a smaller scale that the average person can buy into. In the past, this was pretty much really the ultra wealthy that could afford it. And then the last one, microfinance. If you got something that you want to go out and do, you say, yeah, I want to help somebody financially, I want to invest and do good things in the world, and I don't really care if I make any money, go to www.kiva.org and loan somebody 25 bucks. I loaned money to a woman in Nicaragua. She owns a grocery store. She was looking for $500 for seed money to open her store so she can provide in this small poor neighborhood. And loaned her $500 via Kiva, and she pays me back at like $4.93 a month or something like that. I won't make any profit off of it. Never planned on it. There are microfinance opportunities where you can do that. There's even microfinance opportunities here in Hawaii. So, a lot of things that you could do. I hope you'll do them. I hope you'll help me make the world a better place this way. And do more than well. Do good. All right, that's all I got.
Time for questions. Do we have a little time here?
We've got 10 minutes, I think. I want to know about B
Yeah, we do.
corporations more.
Pardon?
More about B corporations. So I know Hawaii has B corporation